Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, October 1st, 2015. And I'd like to take a look at the gold mining stocks in this video. I think there's pretty much the entire sector looks to be setting up for another bullish run here. And as I mentioned on the site today on a static post, the mining stocks, we're looking at a weekly chart right here. For years, they've been in an unarguable downtrend, a vicious bear market. However, these rallies, what might on this chart appear to be seemingly small counter-trend bounces, these were all, if you want to use the technical definition, bull markets. They each one was a gain of 20% or more, and we caught, I believe, every one of these since 2013, mid 2013. Caught them on the long side, traded them long, short. And a lot of the individual mining stocks, were hit for targets, in excess of 50 and 60% in some cases. So, point being that whether there's more downside in the miners over in the coming months or years, I don't believe that to be the case, but that doesn't matter. As a trader, I'm looking out here at some opportunities that may materialize very quickly here. And again, I'll speak on that in a little more detail. But before we really dive deep into the mining stocks, let's take a look at the metals. Every time I do these videos, I would be remiss not to talk about the precious metals, gold, silver, and I want to touch on platinum. I see some bullish developments there as well. This is the gold chart, same weekly chart I've been pointing out for ages. When gold topped here, that was pointed out. There was this long-term channel. This was a bull market channel going back even off to the left of this chart. And so gold has, as we all know, been in a downtrend now for several years. And this is the sort of a triangle-ish pattern that gold has been moving down in. And so we're at the bottom of that pattern now. And these are where your rallies have started in the past. If you look at this point here, right here, there's been several opportunities to go long, where gold trades at the bottom of that channel and then it shoots up and usually works its way up to the top of the channel in just about every case here. So we overshot it just a bit, but we regained it, so that in itself, initially bearish, we closed under it for a couple weeks, but we shot back above it and we've held that, and we've been riding along the bottom of that channel. And most importantly, as I've talked on for a while, as gold continues to work its way lower in a semi-controlled descent, I'll call it, we have just about every indicator and oscillator on the long-term time frames putting in higher lows. In other words, that's bullish or positive divergence in place. So that keeps my longer-term outlook bullish on gold. Now, again, unarguably, the trend is still down. We're in a bear market, and until we, probably the one, if we could put a single most solid, one signal that would probably trigger or increase the likelihoods that the bear market is over and a new bull market is in place, would be a break above this downtrend line here. It's been pretty well defined since it looks all the way back to late 2012. So there's some work to be done, but again, we're looking here right now. I'm looking at the near-term and intermediate-term outlook, but this helps paint a picture for the longer-term outlook. Silver, pretty much same story. Silver's been in a downtrend for years, peaked back in 2011, and as you can see, it has a similar downtrend line here below. There's an uptrend line which we have to take out. This is an uptrend line we'd have to watch to, let's say, safely say or declare that the bear market is likely over when that downtrend line is taken out. And we could draw a sub-downtrend line here at this point. So this would probably be bullish to see that taken out. But either way, the same story. We have bullish divergences in place, which indicate that the longer these divergences build, assuming they continue to build, there's nothing that says that silver can't just plunge, come back down here to the 2008 lows and take out these bullish divergences. So this is just a potential bullish development here, and until we see prices turn up, we need to see this PPO curl back up. It'd be nice to see it cross above this zero line, the dotted line right here. As you can see here, it's had a couple failed attempts to get above that level, and usually we're in bull markets when we're above the zero line on the PPO, and in bear markets when we're under that. So those are some of the things to look for. Enough on that. Let's move over to platinum. This is actually not spot platinum. This is the an ETF, holds physical platinum shares. One that I like to trade if I'm trading platinum. I do have a spot chart. I should have had that ready for this video, and I don't have my stock charts up right now. I have spot platinum prices, and there's some bullish developments there. I'll try to post that on the site as a static chart. This is a daily chart here, daily time frame, and you can see this bullish falling wedge back here that provided a long entry on platinum a while back. That was in 2014. We had nice, strong bullish divergences or positive divergences below. We had a breakout, a near back test, and then that trade went on to hit the first target. And platinum's continued the resumption of its downtrend, and now although not the best defined pattern, we do have bullish divergences in place, or potential divergences, as I like to say. We have the MACD still pointing lower, so at this point this is only potential divergence. So I plan to probably have to move this line, and if and when this line is no longer at least parallel, once it moves below parallel, it means the MACD has made a lower low and positive divergence is gone. But as of now, there's potential, and I do think that we're going to see a reversal here soon. I have this wedge sort of loosely drawn. If we reverse there, this would be what the bottom of the wedge would look like, and then we'd look for a breakout above, and then we'd almost certainly see a reaction here. There's several tags on this what I'd call our primary downtrend line on platinum. So I'm on the lookout for a break above this falling wedge, and I'm pretty optimistic that we'll get it soon. I may even start a scale in position, with stops down here somewhere in this area here very soon. And again, I'll be on the lookout for any technical signs of a reversal, even if it's before that pattern's taken out. Maybe a nice big bullish engulfing candlestick or some type of candlestick reversal pattern. So that's the metals. Now let's take a look at the miners. Okay, back to that GDX weekly chart that we started with. Much of the same. I've talked about this descending broadening wedge pattern forever. It's getting a little long in the tooth. It still takes the form of that, but most importantly is this lower downtrend line that defines that pattern. And when I say a descending broadening wedge pattern, I'm referring to this lower trend line and this upper trend line here. And just like gold, tags of that trend line have been excellent buying opportunities, and we've been able to make some nice swing trades on the long side. Of course, using the daily and 60-minute charts to really hone in on our entries and exits. But as you can see here, we're back to that trend line again. There's been several almost intra-week breaks below, but prices have managed to close back above it. So far so good. And just like gold, we're riding along the bottom of that wedge now. But a couple things I've pointed out here, we're looking at a 10-year price history on GDX right here. And the white arrows show every time on the weekly chart that the miners have become oversold, meaning they've crossed below 30 on the weekly RSI. And as you can see, we've had some just tremendous bull markets or rallies off those levels each and every time without fail. So where are we at now? That arrow's not accurate. Here's the most recent reading. We've had that cross back above 30, which I like to see. And of course, this arrow should be lined up with that one. So really, this is that cluster of oversold readings. Bullish divergences in place. If you look closely, you can see that the PPO is starting to curl up. It has not made a bullish crossover yet. That would be an additional, some additional evidence, I should say, to support the case and confirm these bullish divergences. So again, I think the risk reward here is very favorable, and I'm talking for potential swing trades lasting weeks, possibly months, or even longer. Okay, zooming down to the daily chart of GDX. Do me a favor and just ignore the lines to the left. I haven't cleaned this chart up. These are lines that I've used in the past, traded off of, so it looks kind of busy. What we're going to focus on, the salient trend lines on this chart are right here. This downtrend line, I should highlight it here. That downtrend line off the, looks like the May, yep, the May highs, and we have this line here, which forms a bullish falling wedge pattern. As you guys know, that's one of my favorite patterns, very lucrative, easy to trade if you get it right. As you know, I like to see those patterns confirmed with positive divergence, which we have in place here. I'd like to see this MACD cross up above the zero level here, which we're about to do. So what I'm looking for here soon would be a bullish crossover on the MACD. It's sort of pinching now. The lines are close. And a bullish crossover, a cross above, I should say, above the zero line. And that would help confirm that divergence. And in doing so, we'd probably see a breakout above this wedge, which of course would be a buy signal to see a break above this downtrend line. And I had this line here for a while. This was a key support level. There was a huge gap back here earlier in the year. And that was a very important support level. It goes off to the left of the chart. You can't see all the reactions there. When gold stocks broke down, they had a very vicious, huge gap below. And you see the price history, and I talked about this in the past. They tried to regain that level, held it for a day, and then gave it up the next day or 2 days later, and boom, that's what's happened to gold stocks. So again, the technical posture right now is quite bullish. I'd almost use the word very bullish, in my opinion. We need to see evidence, of course. You can be close but no cigar. We've had divergences in the past that haven't panned out, but more often than not, they do. These divergences indicate a likely trend change in the making. So if and when we break out, my expectation would be a run up to this, 1540-ish level at the very least, and quite possibly beyond. Okay, now what I'll do from here. For those of you interested in individual trade ideas or a little deeper understanding into my thought process, as I often talk about, if I'm trading the broad market or if I'm trading an individual sector, like the miners in this case, I'll take a look at the holdings and make sure that especially the top components, the largest holdings in the sector, confirm. So what I have here is a chart of my related items, and I've ranked these by market cap, with GG being the largest at about $10 billion. And so we'll go down. I won't cover each and every one of these, but there's 2 points here. I want to show that the charts confirm the bullish setup. In other words, we're not there yet. A lot of these individual stocks look very similar to GDX, obviously, with similar downtrend lines, which we're very close to. Bullish divergences in place. There's some capitulatory volume here that may be indicative of a selling climax. So I'll run through these. And for those of you who prefer to trade individual stocks, myself, I often do. You give me a sector, whether it's long, short, bullish, bearish, and I can often drill down within the sector, as I've done in the past with the gold mining stocks, and pick out the most bullish looking stocks if I'm going long, or the most bearish looking within the mining sector, and almost always outperform GDX in itself. So you have a couple options. You can trade GDX if you're not as comfortable trading individual stocks, or don't have the capital to diversify amongst let's say a dozen or so names, which you need to do if you're going to successfully trade the sector and have diversity there. So you can go with GDX, you can go with one of the leveraged names, but as I talked about, if you're going to go into this for a multi-month, what may be a multi-month swing trade, you're going to have a lot of decay in a leveraged ETF like Nugget. So you might be better off shorting the inverse, which is dust. That's the 3 times short. If you plan to hold the miners, if you think there's going to be a multi-month rally or a bottom, sooner or later, within the next year or so, we'll have a bottom in the gold stocks. I can all but assure you that they're not going to continue down forever. So, all right, let's take a look at the individual names. I'll move this off the chart just to get it out of the way. And the first of the group, as I mentioned, is GG. I won't spend a lot of time on this. Some of these charts, most of these I've already mocked up. As you can see there, I didn't have the bullish divergence drawn here, but you can see it right there. Price is making a lower low, with the MACD RSI making a higher low. Just as I said with gold and GDX before, we want to see this MACD cross above that zero line you can see here on GG. these bull trends have been marked, but with the MACD being above the zero line, and once we're in a downtrend, that zero line often, not always, but often acts as resistance from when tested from below. So cross above the zero line. Breakout, obviously, first and foremost, a break above this wedge, which will almost certainly happen, give you that bullish crossover. So let's see a break there. The horizontal lines, as well as the downtrend lines in all these charts that I'm talking about, are potential targets, i.e., or resistance levels. So I will add some of these official trade ideas on the site more than likely. But if you have any questions on any of the stocks that I'm covering, just shoot me an email through the contact form. Next one up is Newmont, NEM. Very steep downtrend line. Very sharp and powerful divergences. And as I often talk about when dealing with chart patterns, especially bullish falling wedges or just any trend lines in general, the steeper the advance or the decline, the sharper the reversal when it comes, more often than not. So with Newmont, if that breaks out, I'd expect a move, almost as sharp as this last move down here. So we'd probably blow right past this. This would be my first price target. Several reactions. There's one there, a couple reactions back here. But ultimately, I could see in relatively short order, meaning a few weeks, couple months, Newmont running all the way up here to at least the $20 area if and when this wedge breaks out. And assuming the metals in the rest of the sector confirms. That's very important. You see a breakout in Newmont. What you want to see is a breakout in GDX. You want to see some bullish price action in gold, silver, everything else. Okay, next one up, Barrick, symbol ABX. This is the larger downtrend line, and then I have this shorter term downtrend line. So this wedge, either or of these, break above this would probably most likely shoot us up to this trend line, and then ultimately this would be my first target here, T1 about the 850 area. Same story, bullish divergences in place, just as we had back here when we traded ABX and it shot up. You can see the impulsive breakout, the move up. And, that was a nice run. Might not look like much on the chart, but we ran from, what was it, $11 somewhere around there up to above the $13 level. That's a nice move. FNV, Franco-Nevada, very solid. This was a very solid support level here. Numerous reactions. And then that broke down. We tried to regain it, couldn't do that. But now we've been pushing up against there. So if and when they get above, not one of my favorites, to be honest with you. I'm just covering the largest names going in descending order so we get an idea of what the sector looks like. So I don't think I would take this one personally, but I just wanted to point that out. That would be a bullish technical event if and when prices can break above and hold above this level. I'll call it 46. Symbol gold, this is Rand Gold, bullish divergences. I haven't drawn all the lines, so there's quite a few resistance levels I have here, but this downtrend line would most likely be my initial swing target if I were to go long GOLD. AEM, a little bit of a messy chart. Almost bullish divergence here, almost positive divergence, I should say. We didn't make a lower low, but almost an equal low. It's got some work to do. Again, not one of my favorites, so I'll move on. SLW, the divergences aren't drawn here, but you can clearly see those. I'll add those in. And same story. You got to break above this bullish falling wedge. That would be your first buy signal or your entry on a long. There's a line I have here, about 1360-ish, and this downtrend line. I'd really be looking more so at this downtrend line as the next target. And then if and when it gets above this level, let me put a horizontal line there. See this reaction high from, looks like in August. There's a thin zone between there. A thin zone, you can pretty much, you don't see any prices or candlesticks to the left of the chart here. And this goes back 2 years. And that's also evidenced by the volume of price histogram. Those are the green and red bars that you can should be able to make out on the video here. I have them tuned down a bit. So when thin zones are entered, once this trend line's taken out, let me draw it out here, what my expectation on a trade like this would be. You'd see a breakout. You'd probably come up to this trend line. Wherever you hit it, depends how quick it gets up there, and then most likely a reaction, meaning a pullback and or a consolidation. If and then once you break above that trend line and you get above this reaction high here, this thin zone is likely to be filled rather quickly. That's just how it works. They're very similar to a gap. So that would be, potential bullish trade on SLW. Next one up, AU. This one has long-standing, about year-long bullish divergences with both the MACD and the RSI making higher lows. As shown with prices against prices making lower lows. Here's a nice downtrend line. It's been working its way up. This one's been hanging in there. This is a resistance level here. Punch through there. You can notice the 200-day EMA, that red line, has done a good job of capping advances somewhat. And it comes in right now around with this downtrend line. So that one has a little work to do, but if it works its way up and then ultimately punches above this downtrend line, this one could have some room on the upside to run. Royal Gold, RGLD, same story, very steep bullish falling wedge. I don't have the divergences all marked here. Now I do, at least on the RSI and MACD. And this one's likely to run up to this area. I have these two horizontal lines here called a resistance zone and this downtrend line. So this is the target area right now for RGLD. DCGTO, this one, if the .TO indicates it trades on the Toronto Exchange. This one, I added this bearish divergence because prices have made the higher high. I try to avoid confirmation bias. I'm more partial to this chart being bullish, but the divergences that it put in at this high here concern me. Now, they did play out for a decent correction, but this one has really bucked the trend. Again, this is a 2-year chart, so to see a gold stock doing so well in a vicious bear market, that shows you a tremendous relative strength. So this line here around the $16 level is this double top high. Let's just take a look at the weekly chart. Yeah, you can see it there as well. Same line. So go back to the daily chart. Anyways, a solid and sustained break above this $16 level would be bullish. And what's nice about this one, we're pinching towards the apex of this large triangle pattern. This is an ascending triangle. Ascending triangles have a flat top and a rising bottom. So it's a very large ascending triangle, and what that does, it quantifies our risk. As time goes on, if you take it, let's say you take it on the next pullback to this downtrend line, that would be uptrend line. That would be an objective entry because you could have your stop place not too far below. And then, of course, you'd be positioned and hoping for a breakout, an upside breakout. Now, if you take an upside breakout of the pattern, you can do one of two things. You can set your stop back inside a little bit below. It may want to come back and backtest the $16 level. And depending on your time frame and how much room you're willing to give this thing, you could also set your stop below this trend line because it is, as time goes on, it's coming much closer to the horizontal line there. Okay, let's run through these a little quicker. There's EGO, same story, bullish falling wedge type pattern, nice horizontal resistance. That would be a solid target right there, the 1425 area. I'd almost bet the farm on a reaction at the very least when it got there. That's a pretty decent support level. So any pop above that trend line would take you up, and might be wise to book some profits or tighten stops at 1425. GFI, nice divergence here. This line showing prices making lower lows against higher highs, or higher lows on the MACD and RSI are the divergence. And that's some old support right here, the $3 level, which may act as resistance when we come back up against it. And if it can get above there, not one of my favorites, and the reason is there's a lot of noise, if you will, or a lot of price to the left of the chart. So it may have a tough slog ahead of it if it gets above that $3 level. So not one I'd be taking, but bullish event nonetheless if it does get above that $3 level. KGC. Two things here. I have these. This is a primary downtrend line. This probably goes back farther. I see it going off to the left of my chart here. Yes, it does. Goes all the way back to 2012. And let's zoom back in. So there's that downtrend line from 2012 and almost forming a channel at this point. Now, this line here with prices from this point to here making a lower low, same story. Bullish divergences with the indicators making higher lows, and these yellow lines are a descending price channel. So if trading this one, I'd probably have to add some additional support and resistance lines, but you'd want to see it get above this downtrend line to be safe. And then you have this is a pretty solid resistance level here, or area, these two lines, resistance zone I would call it. It needs to take out, but if and when it does, you can see that that primary downtrend line comes in right there with it. So that would be a very solid breakout if it can take out that, let's call it the 225 level. So that's what to look for in KGC. CGTO, another Toronto stock, same story as the one we just looked at there. Look at this, 4 attempts so far. It's tapping at this $8 level. And like the other one, you have this ascending triangle pattern. You do have the divergence. You know, these indicators are moving down slightly. So just something to be aware of. But again, you wouldn't want to buy just below this resistance level. That doesn't make a lot of sense. You either want to buy on a pullback to this trend line with a stop below, or wait for a breakout above. TAHO, Tahoe Resources, nice, pretty nicely defined downtrend line. So this one's ready to pop. It's pinching. I mean, the prices are really pinching towards the apex of this pattern. One thing I could see with this, just looking at the MACD, which is struggling to get above that zero line and pointing down slightly, curling down at this time, I could see this one drop out below this pattern just briefly. That would run a lot of stops. This has been a horizontal support level, this lower line. So I could see something like this. We'll draw it out. If I could. Well, okay, sorry, lost my screen draw tools. Okay, so maybe a quick move down that would bring the MACD down a little bit, but then a reversal that would wash out, probably clear out some stops, and then a move up to break above that downtrend line, and we'd probably run up to, I would say that $10 level is the most likely first target, and then ultimately we'll have this downtrend line to contend with. So maybe, some reactions in this area, a little zigzagging action, and then boom, if the longer term bullish case on all these stocks that I'm talking about, when I highlight these, what I call primary downtrend lines, if and when those go, there's a good chance that this bear market is over, but we're far from there yet. Right now, I'm just looking at potential swing trading ops, and again, we're not even there yet because we haven't broken out really on any of these patterns yet, although it looks like we're poised to. Here's AUY, same story, bullish divergences. Here's a case, we don't see this often, but back in early 2015, earlier this year, we had very strong divergence forming, bullish divergence, with prices making lower lows, at least a slightly lower low in price, but much higher lows in the MACD and RSI. And that one didn't play out for anything. So that's why, I do put a lot of weighting in these divergences. Ultimately, it's always a trend line break. That's your buy signal. And, this one just didn't break out. Instead, we set up these divergences, and here's a case where prices failed to break out and just, boom, dropped lower and took out those divergences. But we do have some new divergences in place now. And really, I don't have it drawn here, but, what that move down, it just set in longer, more powerful divergences. In other words, from this low in the MACD to these recent lows, as well as the RSI, which really made almost equal lows, but that still counts as long as the oscillator indicators didn't drop below their prior levels, with prices making much lower lows. So that really just sets up for a more powerful, lasting reversal should prices break out. And on AUY, you need to see this downtrend line here taken out. That would run us up to that whatever that line is, 230 or so here, I can tell you. 237, somewhere in that area, I'd call it 230, 240. And then we probably run all the way up. I haven't added it here, but you definitely want to put a horizontal resistance line here at the bottom of this support shelf that broke back here. So that would be your next target. Again, we have a thin zone there. So that one looks nice to have some potential in the coming months. Okay, we're going to wrap this up here in just a couple more. BVN, that was one of the few. It had a very steep downtrend line with some divergence in place. Broke out recently, came back to test, and it's testing those old lows, the recent reaction lows, holding up right now. Again, this is another one. It may hold here and turn around and go up. It may want to punch through there, run some stops, shake out the last of the weak-handed longs, suck in a few more shorts before it turns around and blasts off. But I like the divergence in place, and I think this one has potential. NGD, well, there's your lines. We need to take out this horizontal resistance, which intersects, comes in close with this downtrend line. So this one's basically in this descending price channel. Nice divergence in place like everything else, so some potential there. SBGL, that one's kind of a mess, not my favorite. BTG, this was a sort of a symmetrical triangle pattern. Prices recently broke down below, almost matched that previous reaction low. If they go any lower, we'll have divergence on both the MACD and the RSI. So again, I'd welcome another thrust down in a lot of these stocks just to wash out, as I said, some more longs, put in some more shorts. That only adds fuel to a potential short covering rally, and you get a rush of new buyers back into the stocks that are more likely to hold. That's the positive part of washing out. When I use the term weak-handed longs, I'm talking people that have felt pain all along in these and finally capitulate, and then you put in a new wave of holders in the stock that tend to they aren't looking to sell at the first big pop just to get out and break even or recoup some of their losses. PAAS, Pan American Silver, I don't have anything marked up there. ASRTO, is a Toronto stock. I don't see anything there worth mentioning. SMFTO, there's a nice downtrend line. We're really in no man's land on that one, so I'm not too interested in that unless it gets above this downtrend line. HL, just trying to work and pound out a base there. IAG, nice positive bullish divergence here, which has played out pretty much for a move already, at least one move. And now we have this downtrend line to watch. So this would be your next buy signal above that line. Probably looking at some resistance around $2, and then this downtrend line, that's the big one to watch. So ultimately, at least in the near term, I'd like to see a move up to here, and then again, like everything else, if and when these primary downtrend lines get taken out, then we're looking at a much more sustained move where an investor or a trend trader can get involved in these trades and hold on, hopefully tuck them away for a couple months or a couple years possibly. AGI, nothing there. Last one I'll wrap up. CDE, I like this one. Very nice pattern, bullish falling wedge, well-defined pattern, more defined than most of those numerous touches. Same story, nice strong divergences. So if and when this one goes, and I've traded this stock, I love this stock, this would be my first target. So we're looking, just say it breaks out here somewhere on the $3 level. I'll move up to the $4 level. That's about a 30% run right there, and that is why I like to trade these individual stocks with the most attractive patterns. Speaking of CDE, in the past here, let me get rid of this trend line here. We had this inverse head and shoulders pattern. You can reference this on the site, just pull the symbol, go back. This was a pattern we recognized ahead of time. This was a textbook inverse head and shoulders pattern. A beautiful symmetry on this left, with the whole pattern, left shoulder. There's the head. I didn't mark it here, but that's the head. Then the right shoulder with a downward sloping neckline. And this was the pattern measurement, the distance from the head to the neckline. And this one played out almost to the exact penny. These were the horizontal lines on this chart that I had. And that's exactly, once the breakout occurred, where that pattern went. And again, this was, from where it broke out. I think we booked gains at 60-something% on this. That shows, well, from where I dragged. Yeah, I believe this was a 50+% or 60% gainer on that trade. So this one trades very well off the charts, was my point, and I do like this setup. And again, this is your official entry. I don't have space to put all these as official trade ideas, and that's why I wanted to go through these charts for you those of you that are interested in trading the individual stocks. But I will try to put up a few of my favorites on the site soon. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.